Welcome back. Earlier today, construction spending was reported to have risen 0.9% in May overall to 1.93 trillion. We're going to see a massive divergence between residential and non-residential construction. Private residential construction fell 11.6%. Single family construction was down 25% since last year. Multifamily construction is up 20.4, and the public residential is up 12.3. Again, the big theme here is a divergence between public and private construction. Here we see the overall construction numbers in blue, S&P 500 in red. We could see a very strong correlation at least until 2022 when the S&P turned to the downside, but that really has resumed its upward hike and really staying in line with overall construction numbers. Residential construction is in red, non-residential is in green. Notice the divergence between the two. The S&P 500 is a blue area chart in the background. And what we can see here is non-residential really is outperforming residential. It bodes the question, in light of higher interest rates, would this not affect both residential and non-residential? Well, at least on the surface, it seems that the residential construction is more sensitive to the higher interest rates. Perhaps that's because corporations involved in non-residential construction have been able to hedge themselves against higher interest rates. Here's residential construction versus the S&P 500. S&P 500 is now outperforming the residential construction numbers. Really, the residential is probably the weakest part of the overall sector. This is non-residential. In the blue area chart, notice how we continue to spike even higher, almost at a near vertical rate. The same chart we can see is in commercial construction numbers versus the S&P 500. We see here a massive move higher in highway and street construction. That in part, or probably is largely funded on a federal level from government funding. So it's no surprise how that number just does not stop going up because really federal funding is not really as sensitive to interest rates. Here's healthcare construction, a new, even higher spike to the upside. Manufacturing construction, a very, very sharp spike to the upside. Office and S&P 500 correlation here, it's pretty consistent. You know, when you have a downturn in the office construction, I think a lot of that was also due to COVID, where there was so many more workers working from home. A lot of that has not resumed back to the office. Maybe that explains a little bit of a lag in the overall sector. The lodging in S&P 500 is shown below. This is really the outlier. One of the key components that was really hurt very, very hard as a result of the COVID shutdown was lodging, hotels. And we can see that hit a very significant low 2021. Where the stock market recovered, this has not seemed to recover as much. Here's a power industry in terms of construction spending, also not really that great either. Here's transportation, that's making new highs. Construction components, and these are all the different sectors of the construction industry. Notice the dark red line all the way to the top, that's manufacturing construction. That probably represents the single greatest increase we've seen over time. Compare that to the green line at the bottom, that's lodging. It really has not been able to fare much better than it was last year. Alongside with lodging, the other losing industries include healthcare. The brown line is transportation. The winners, again, manufacturing. The dark blue line is power. The light blue line is commercial and office. We mention this because if we're going to position our stock investments, for example, we should look at if we have stocks that are sensitive or benefit from the construction industry, we should look to see what segment of the construction industry. Are they residential construction stocks? Are they housing, or I should say lodging and hotel construction stocks? It really does make a difference. Over the past month, this has where the money has been going. 4.34% to the upside. Actually, one of the losing sectors, healthcare, now seems to be outperforming the other sectors. The biggest loser by far is commercial construction, which at times does follow residential construction. Because residential construction has been so poor, perhaps that the commercial sector is following pace. Yearly change, not a big surprise. The biggest winner, manufacturing construction, up 105%. Now, logic has mounted a tremendous recovery, but again, that's coming off of very significant lows. And I always find it interesting to take a look at the overall performance by year. X axis or the Y axis on the left hand side shows us by year the number one performing sector in the construction industry this year, 2023 so far, is manufacturing, up 40%. It was up 54% last year. Now, the biggest loser this year, well, office construction is down 1%, commercial is down 3%. And we can see here logic also. It did recover last year, it was up 40%, but so far logic is not really following through. I would not be surprised to see those stocks, especially maybe those hotel stocks that are more closely linked to the lodging sector or component of the construction industry to really not perform well, based at least on the spending that we've seen here. So use this information, to try to identify which investments we have that may benefit or not benefit from the movement of money within the construction sector because again, it really certainly does make a difference. There's such a divergence between, for example, manufacturing up 40% for the year, lodging only up 2% for the year. We hope this has been helpful. We look forward to seeing you back soon.